Good morning. Happy Wednesday, everybody. It is Wednesday, August 12th today, and we're going to be talking about payroll taxes. So you might be watching me in several different places. If you're watching me over on Financial Literacy for Women Business Owners, that's my Facebook group. Come join us if you are not already a member over there, balancedcfo.com/group. We have, we're getting close to 30,000 now in that group. So come on over. We're having lots of great conversations, lots of things about the stimulus that's going on specifically and other topics around financial literacy. So come join us there. Also, I'm live on my Balanced CFO Facebook page. Make sure you like that and follow that page as well. And then I'm also going live on my YouTube channel, Jamie Trull. And if you're watching me on Facebook, it's listed above. So make sure you go over there and subscribe it because I have lots more videos and lives and things like that on all of these topics for you to view. So if it's something around the stimulus, there's probably a recent video about it over there. Wednesdays, I go live on a specific topic. I'll take your questions toward the end, depending on how much time we have. And then on Fridays, I do a full stimulus update and Q&A, just depending on what's going on, what's happening in Congress, what do we need to know about, is anything new passed? We talk about that on Friday at 1:30 Central Time. So good morning. Tell me you're here so that I know you're there. Hi, Karen. I see you over on YouTube. So make sure to say hey and make sure to tell me that you can hear me because I always get nervous. Somehow the sound's not going to work. So again, today, payroll taxes. I'm going to start with talking about just overall, what do we mean when we're talking about payroll taxes? Because I think it's important to kind of level set before we jump in. And then after we've kind of level set and talked about what payroll taxes are and how they work, we're going to talk about actually 4 different ways that the stimulus things that are going on right now, that COVID-19 is impacting payroll taxes. And this applies to business owners, but there's also some applicability in here to employees as well. So wherever you fall, make sure to listen in. Okay. Hi, guys. Great. I see Samantha. I see Vicky. I see Pinky. I see Marissa. Awesome. I see lots of you guys. Hi, Jeannie. Great. Awesome. Hi, guys. Okay. So let's jump in really quickly and start talking about what we mean when we talk about payroll taxes. And I think that this is important because there are so many taxes, right? When we are talking about being a business owner, specifically also an individual, but there are so many taxes that we pay. And so when we're talking about payroll taxes, we are talking specifically about Social Security and Medicare. Okay. So that's typically what you're going to hear. It's like what's listed as FICA and that, and Medicare over on your paychecks if you're an employee. It is essentially the amounts that are taken out of your paycheck that's not related to income taxes. You do pay them oftentimes, like that will be part of your, when you file your year-end 1040, right, as an employee. That's kind of how you'll settle up on those, similar to income taxes, but they are a separate tax, okay? So how much are they? The Social Security is the biggest part. So I want to divide this up a little bit because there's really 2 different parts. There's an employee and an employer part of payroll taxes, okay? So that's where, and this is important to understand before we jump into what we're going to talk about with how the CARES Act impacts this, because it impacts employer and employee differently, okay? Now, listen in, because if you're a business owner, you are probably wondering, okay, well, what do I fall into? And I'll tell you that in just a second. Ultimately, you get to pay both. But let's say in a regular employer-employee relationship, this is how it would work. You would have an employee and you would pay Social Security, which is 6.2%, and then Medicare, which is 1.45%. I think that's right. Yeah, I think it's 1.45% for Medicare. So most of it's Social Security. It's only on wages. You pay Social Security on wages up to $137,500. I think after that, you don't have to pay Social Security on those wages anymore. But for these examples, we're just going to say, okay, you pay payroll taxes on at 6.2%. That is if you are an employee. That's what comes out of your paycheck, 6.2%. comes out for Social Security, 1.45 comes out for Medicare, right? And then the employer pays the employer side of that. So the employer basically matches it, right? So the employer is also going to pay 6.2% and 1.45%. So half of it comes out of the employee paycheck, half of it comes out of the employer's pocket. All right. So that's how it works in a normal employee-employer relationship. And if you are an S Corp or a C Corp and you pay yourself a paycheck, that's how it works for the paycheck portion of what you pay yourself as well. Okay. Now, again, if you're an S Corp or a C Corp, that's where payroll taxes come out of that. When you pay yourself, and this is just a quick aside, because this is something that's come up a lot in this COVID world, if you're an S Corp or a C Corp and you pay yourself distributions, you don't pay payroll taxes on it. That's one of the benefits of being able to be a corporation, okay? But you don't pay payroll. And that's why with a lot of this COVID-19 relief that has happened, it doesn't let you, like for PPP calculations, it doesn't let you count your distributions. It's because you don't pay payroll taxes on it, right? It's not payroll if you don't pay payroll taxes on it. Payroll taxes are paid on compensation for work performed in your business, okay? And that's only a paycheck when you are a, when you are an S Corp or a C Corp. If you are a sole proprietor, LLC, independent contractor, 1099, all that, you pay both sides, okay? So you're gonna pay both sides on all of your earnings if you fall into that. So you end up paying, basically it's 15.3% altogether. You pay that on your net profit. You don't pay it on your total revenue, it's just your net profit. So that's why it's so important to make sure that you are getting all those expense deductions that you are entitled to. And then you will pay 15.3% off of that, okay? That's how it works for self-employed people. So I won't go too much deeper into it than that, but I just wanted you guys to have that background of what we're talking about. So it's also when you're self-employed, we typically don't call them necessarily payroll taxes because you're not paying yourself payroll. We call them self-employment taxes. So that whole 15.3% is self-employment taxes. So you might also hear that terminology. It means the same thing. It's just the employer and employee side of payroll taxes that you get to pay. Yes, exactly. It's 7.5% times 2. Yes, an LLC can be an S Corp. I specifically talk about, when I say S Corp, I mean an LLC who is elected to be treated as an S Corp, or a C Corp who is elected to be treated as an S Corp. But I just shortcut saying that because it's a lot of words. But yes, that's what I mean. If you're an LLC that's elected to be treated as an S Corp, then you are under S Corp taxation. If you are an LLC that is not elected to be treated as an S Corp, you are under sole proprietor taxation, i.e. you file a Schedule C. Okay. So hopefully that makes some sense and that we're all on the same page before we start talking about how these stimulus, there's a lot of different things that has impacted the payroll taxes, because that is one of the levers that the government has, right? That is one of the revenue, sources that they have. Again, that is supposed to be earmarked for Social Security and Medicare, right? But that is one of the levers that they have. And so they've been playing with that lever quite a bit all the way back to March when the CARES Act was passed. So I want to tell you about 4 things that potentially could impact your payroll taxes, okay? The first thing, and I'll tell you the 4 and then I'll go dive into each of them. But the first thing is the CARES Act. The CARES Act had a deferral of the employer side of payroll taxes. We'll talk about that in a minute. It's optional. The executive order that just came out this past weekend from President Trump that he signed impacts the employee side of payroll taxes. And when we say payroll taxes, even though typically payroll taxes is Social Security and Medicare, they are not touching, none of these COVID items really touch Medicare. They are all focused on that 6.2% of Social Security taxes. So 6.2% employee side, 6.2% employer side. We're talking about the Social Security piece, okay? So I think the news uses payroll taxes a lot, but really these impact Social Security, not so much the Medicare piece, but the Medicare piece is the much smaller piece. Okay, got it. So now, so I said that was the CARES Act defers employer. The executive order deals with a deferral of employee. Again, we're going to jump more into this. I just want to give you the 4 bullet points first. Then we have the ERTC. Okay, so that's the employee retention tax credit. That was also part of the CARES Act. We'll talk about that in a minute and what the heck that is. That is an actual credit, not a deferral. So important words we'll get into here in a minute between deferral, credit, holiday, all of that. And then the FFCRA, which is the Families First Coronavirus Response Act, which was passed in March. It actually was not part of the CARES Act. It was pre the CARES Act. It was like a week before the CARES Act came out. They passed the FFCRA. That's the one that deals with paid family leave for COVID. If your kids don't have, if your place of childcare is closed, or if you actually get COVID or your employee gets COVID, or they're being, waiting on diagnosis for it, or they have to be quarantined for some reason because of it, that's when the FFCRA, paid family and sick leave, kick in, and you get those credits via payroll tax credits. We'll get into that in a minute. That one I have an entire video on. Okay, so if you are not watching my YouTube channel, make sure on Facebook, it should be above. Make sure you go over to my Facebook channel or my YouTube channel and subscribe, because I do have a video that is just on the FFCRA and how that paid family leave works and how you get that payroll tax credit. So I'm not going to go into that in detail on this one because it's a whole can of worms in and of itself. But if it is something you should know about, it can help a lot of people. And I think it's something that not a ton of people really understand or know about. And if you're an employer, you definitely need to know about it because you may need this for your employees. Okay. All right. So let's jump real quick. And I see some of your questions and you guys already have really good questions. So let's start at the beginning though. Let's start with the first one, which I still don't think not everybody knows that this is an option. Okay. The first one was the CARES Act said for the employer portion of your Social Security tax, right? The 6.2% that you pay as an employer on behalf of your employees, you can defer that. What does defer mean? This is really important. Deferral doesn't mean it goes away. Deferral doesn't mean it's forgiven. Deferral just means you don't have to pay it right now, and you won't have any interest or penalties or anything for not doing that. Okay, so that's really important to understand. The CARES Act is written such that you can defer the employer portion of payroll taxes. I think it started on March. Let's see. Let me see if I have it written down. I think it's March 27th. So payroll taxes, Social Security taxes, employer side, between March 27th, 2020 and December 31st, 2020, you don't have to pay them. So if you've been paying those for your employees, right, on behalf of your employees, or not on behalf of your employees, but if you've been paying your employer side like you normally would, that's great. But if you're in a cash flow, like really bad cash flow situation, you do have the option to not pay those and not be assessed penalties on them. When do you have to pay them? You do have to pay them eventually. You pay half of those that you deferred on by December 31st, 2021, and then the second half by December 31st, 2022. So they do not go away, and you do have to pay them kind of in lump sums or installments, however you want to pay them in the future. I typically have recommended that people don't take advantage of this. Because unless you are confident that you can do this extremely diligently, because for most people, this is going to come up as a surprise later on. If you defer this, if you're, in a cash crunch now, who's to say it's going to be better? Hopefully it will be better, but we don't know where everything's going and how everything's going to be. And having these huge obligations to the IRS are never fun. Okay, so but it's an interest-free loan. So that is an option for those of you looking at and needing kind of, cash flow to sustain your business. It's an interest-free loan. Now it's a loan with the IRS. So remember that, right? It is what they are going to get their money one way or another. So know that going into it. But if you can have a plan to say, no, I can do this responsibly, and I need this cash flow now, then you can defer those payroll costs. Work with your payroll provider. They should have the ability for you to do that. You can do this one regardless of whether you got PPP or not. So not all of them are that way, but if you got PPP, you can still defer the employer side of payroll taxes. Remember, PPP did not cover the employer side of payroll taxes. You still had to pay that. So you can still defer even after you've gotten PPP. Okay, so that's the general deferral of the employer side that came with the CARES Act. Let's talk about what happened recently, right? This weekend. This weekend, Trump basically did the same thing, but with the employee side, okay? And I'm really gonna, y'all know me. Y'all know I'm not gonna like comment on, I'm gonna give you the facts because we don't need to get into, there's enough people that are willing to argue about this on the internet. I'm not gonna be one of them, but I will give you the facts as I know them and try to do it in an unbiased manner. So the thing with this payroll tax cut, so what this will do between September 1st and December 31st is the employee side of Social Security can also be deferred, okay? Meaning you don't have to pay it. The intention, I believe in this, is for employees to get a higher paycheck, right? So employees get a higher paycheck. Hopefully that means they spend more money to sustain the economy. And then when things are better for them, they pay it back. It is deferred, all right? Still deferred, just like the other. What is not clear right now in the way that this executive order is written, and likely will be something that the Treasury will have to come out with guidance on, is when do you have to pay this back, right? When does this come back to us? Is it the same end of December 2021, December 2022, or could this be January of 2021? We don't have that information yet. Or would this be something that would get settled up on an employee's 1040 potentially? That might be when you go to file your taxes next year as an employee, that you would have to then pay those taxes at that point. Okay. So that's still unclear. Also unclear is what somebody asked is whether it's optional or mandated. The trouble is going to be for employers. If it's optional, you've got then different employees opting in or opting out. And remember, as of right now, this is what's going to be a problem for employers in all this, is that it's not the employees that actually remit those taxes to the government, right? It's the employers. So there's a couple things that could happen here. Employers could say like, okay, well, I'm not going to remit those employee, side taxes, but I'm still going to take them out of the paychecks of my employees. So it almost becomes another kind of business loan, short-term business loan for business owners. Now, we don't know if that's going to be allowed or if they're going to say, no, you can't do that. You have to, if you don't pay us, you have to pass that on to your employees. We don't know. We'll have to kind of wait and see how that comes out. But if it's optional versus mandated, how do you handle that for multiple different people? And then though, right, because it's employers who are responsible for collecting that, does that then mean that employers, when this rolls off in January, need to start collecting extra to cover that? And what happens if an employee leaves before, they've recouped those taxes, right? So who's going to be responsible for settling that up? How is that settlement going to happen? There are so many questions around that. I think what he wants to push and what has been made very clear by him is he would love to forgive these entirely, right? Number one, he doesn't have the authority to do that. There can be some impacts to the actual Social Security, Social Security in general, right? Like that's one of the things around this, is that there's some politicalness around Social Security and how that all works anyway. But he doesn't have the authority to do it. So he could not, in the executive order, include that in there. Congress would have to actually pass that, likely. There's been some, he's said some things to say like, okay, well, hopefully these I'll pass a forgiveness later. But to me, I would absolutely not go into this believing that these are going to be forgiven. We've been through this, you guys. Like, we can't rely on any of that. And by the way, it probably wouldn't be a presidential act. It would likely have to be Congress that would have to pass any forgiveness. And right now, neither side actually wants this. This was kind of the president was really dead set on this payroll tax credit. This had come out of all the stimulus bills that they were even negotiating. This wasn't even a negotiating point on either side, because probably there are a lot of challenges that come around with it. But because he believed in it very much, it was an executive order. And now they're having to figure out like how can we make this happen? If this is going to happen, there's also probably going to be some constitutionality challenges in here, as with most of these executive orders. So right now we're kind of in this like waiting with bated breath around how is this actually going to work? And is this actually going to help the average person have more money to spend? Again, could be an interest-free loan, but the concern there is, what does that then turn into? If now, we defer payroll taxes for that period of time, are people going to be able to pay that back? And what's that going to look like on the back end? And there's just not enough information about that. So this one, I would tread a little bit lightly until we know more, and I'll continue to update you. Treasury, I'm sure, is working out the logistics of how and if this can happen and what it will look like. So how to get your employer to do that? Right now, again, there's not enough information. So it doesn't start until September 1st anyway. We have to wait and see over the next 2 weeks what actually happens and how the guidance rolls out. Because your employer, if you ask them now, they're going to have no idea, because we just don't even know if it's optional. We don't even know if it's mandated. Like how is all of this going to work? We don't know yet. So we have to kind of wait and see. Like I said, it would start September 1st. That's what the Act has in there. But of course, it also has to be kind of fleshed out quite a bit in the next couple of weeks for this to be something that can happen. Let's see. Yeah, so we don't know. This is, again, one of those situations where we don't know. Is it an opt-in, opt-out situation? Do employers have to offer it, or do they not? Because again, there's just a lot of challenges. If you are an employer right now, you're probably like, how am I supposed to manage all of this, right? And how am I supposed to recoup that money? Because you don't want employers to kind of be out that money at some point in time if they don't recoup it back from their employees. So yeah, I mean, there's just a lot to be seen on this. Let's talk about self-employed people for a minute here, because you guys are probably wondering, how does this apply to me? Like, how does this apply? So both of these two things, I'll say this for certain. The first one, on the employer side of payroll taxes, the one that came with the CARES Act, not this new executive order, the CARES Act that let you defer employer side payroll taxes, Social Security taxes, that does apply to you. You can essentially reduce your own estimated taxes for that, and you can take advantage of it. So it is specifically written in the CARES Act that self-employed people, even though you're not paying in, and by self-employed, I mean sole proprietor, LLC, independent contractor, all of you that file a Schedule C, right? You can do this. You just would reduce any estimated taxes you're paying if you're paying them, or it would reduce probably your 2020 taxes on your tax return if you opted into this. Again, y'all make sure to get somebody super qualified to do your taxes this year, because there's a lot of things on the table, and you want to find somebody who can handle this and understands this stuff. You really do. And I have some, so I'll post my preferred vendors. But I'm even looking for more people who I can send people to for this year's taxes, because I think it's going to be really important. Not something I do, because I don't want to deal with any of this for my actual tax return preparation, because it's going to be a mess. But so you can, if you're self-employed, yes, the CARES Act piece, the employer side, you can defer it. You can pay it at the end of 2021 and the end of 2022, just like any other employer. It is uncertain right now how this executive order impacts self-employed people. If it would be the same, if they'll say, yes, you can reduce your estimated taxes and you can put this off as well, or if this is just going to apply to employees who are on payroll. My assumption is it would be both. It would follow what they did in the CARES Act. But again, if you got to pay this stuff back in January, which we don't know when, there's no timeline on the when, which is important, right? But if you did, it's not really a huge benefit to not pay it between October, November, and December, right? September through December. It's not if you got to pay a big lump sum later. So it likely will apply, I'm guessing. But again, we just have to wait and see what all the ins and outs of this are going to look like. So let me know what questions you have on those two before I even jump into it. And I'm just going to really high level talk about the ERTC and the FFCRA because I have some other materials on both of those. But I do want to get your questions for these. So let's see. I'm looking. I think I got most of these questions actually. We don't know if it will be mandated. Let's see. Yes. So I won't get into, there's some questions around how this impacts Social Security, like the program itself, right? I mean, obviously, if it's a deferral, it shouldn't impact it at all. If it's a, if it is an actual, if it gets forgiven, it could. But I don't know how all that is going to play out over time. That's one of the things that's contentious right now is what impact does this have on Social Security, the program itself? If we kind of just forgive all of these Social Security, is that going to impact people later on in the future, right? And who, right? Is it going to impact you? Is it going to impact people who are taking Social Security now? We will have to kind of wait and see on how all of that plays out if it does end up being something that is forgiven. You'll also hear a lot of times people talk about a payroll tax holiday. That's what Trump wants, which is we just go a period of time where we don't have to pay them, right? But there's a lot of, again, even most people in Congress are not, on both sides, are not really into that for a lot of reasons and because of a lot of implications. So I would be surprised if they ended up passing that, regardless of who is in office. Okay, I've read that once your PPP is forgiven, that the deferral of the employer side of 6.2 has to end. Can you clarify? No, so actually, here's the thing about that. In most cases, and I guess if you're applying for forgiveness now, but most banks can't even take forgiveness applications, right? So in most cases, I'm guessing most people aren't going to be forgiven for PPP until next year. Just, you have 10 months to apply from after your covered period ends. So at that point, you don't even have a payroll tax deferral anymore because it only goes through December 31st. So I've seen different things on here. I don't really understand that. To me, the way that I read the law is that PPP now doesn't really impact that. It did in the beginning. You weren't really able to get the deferral to begin with, but now, even if you get PPP, even while you're on PPP and after you've had PPP, and I would assume after forgiveness, because I'm not sure why forgiveness would impact it, because you're not even being forgiven for employer side payroll taxes, right? So I struggle to understand how those two really have anything to do with one another. And that's based on my read, but I know what you're talking about because I've seen other people talk about this, and I just haven't seen anything to really substantiate why that would be the case. So I'm going to keep looking to see if I see anything. But again, for most people, it won't even matter because your PPP is probably not going to be forgiven completely until, at early next year. I mean, for some people, it may be sooner than that, but we'll have to see. Okay, real quick, I'm going to go over the ERTC and the FFCRA. ERTC, Employee Retention Tax Credit. This one, as it's written currently, you cannot get if you've gotten PPP at all, not just while you're on PPP, but it seems like if you've gotten PPP, you wouldn't be eligible for ERTC. What is ERTC? It's a tax credit of up to $5,000 per employee that you get back on your payroll taxes. You have to meet certain requirements, though. You have to have your gross receipts one quarter of this year versus the same quarter of last year be at least 50% down. And then if you do on those quarters, you can take a tax credit for any payments to employees that you're making up to $5,000. So you get 50% of their earnings. So if you paid them $10,000, you get a $5,000 tax credit. If you paid them $5,000, you get a $2,500 tax credit, but it's up to a total tax credit of $5,000 per employee that will reduce your payroll taxes. Again, if you got PPP, this doesn't matter to you, but it might. So here's my caveat, just to make it even more confusing. In most of the stimulus things that they're negotiating now, in the bills that they're negotiating now, they would open up ERTC to people who had also gotten a PPP. So again, you wouldn't be able to get that credit for money that you spent with PPP funds. But if your PPP is done and you've spent that money, which a lot of people have at this point, now with the new stimulus that they're talking about, it's likely that they will allow it even for people who had gotten PPP previously and already spent it. So we're waiting to see. Again, that's only just being discussed. It's in that same bill that's stalled out. So who the heck knows what's going to happen? But I just want to keep that on your radar screen. If you're somebody that got PPP and thinks, oh, ERTC doesn't apply to me, I can't take that. Stay tuned. I'll tell you, but stay tuned. Make sure to subscribe, like, whatever, wherever you are, to make sure you stay in the know on that, because that could be a big help as well. All right. Yeah. So exactly. If you take PPP as a loan, can you get ERTC? I don't necessarily know the answer to that. I would guess yes. But I need to look into that and see a little bit more. But I again, especially if they do blanket forgiveness, which may happen in the next bill, to make it easier to get forgiven, I still think it's a really good idea to get your PPP forgiven. It's probably going to be more than that tax credit would be, but you got to kind of work out the numbers and see, right? Okay, so that's ERTC. I'm waiting to see if they pass that. If they pass that, I will do a whole video on our ERTC, how to claim it. Again, it's a payroll tax credit. You would work with your payroll provider to claim that. But right now, if you got PPP, you can't get it. And most people in my community, I believe, have gotten PPP for their business, so it's not as applicable to them. But if they pass this, stay tuned. Again, make sure to subscribe to my YouTube channel and join my group, because I will be talking about it all over the place. Okay. And then the last thing, again, just going to touch on the fourth thing. So let's recap. Number one, you can defer through the CARES Act. You can defer your employer side of payroll taxes to the end of 2021, the end of 2022. With this executive order that we're still waiting on a lot of information for, it's a deferral of employee side payroll taxes from September 1st through December 31st. You also can only be making, it's only for people who are making under 104,000. It's like 2,000 a week or so that can get this credit. That's important to note as well. The ERTC, can't get it if you got PPP. If you didn't get PPP, but your gross receipts quarter over quarter, so Q2 of 2020 versus Q2 of 2019, let's say, were less than 50%. So you took in less than 50% gross receipts, you can get this tax credit. It is 50% of whatever you pay your employees, you can get back, up to a max of $5,000 and that $5,000, I believe, is in place for the whole year. So if you were able to take that tax credit multiple, and there's some rules around how long you can take it and when you have to stop taking it. But the max total benefit is $5,000 per employee. Again, stay tuned, because they may change the rules on that. So it may matter to you more later. And then the fourth one is FFCRA, Families First Coronavirus Response Act, passed in March before the CARES Act. That is what brought the paid sick and family leave, where if you're paying your employees for sick leave, right? If they have to be sick, if they test positive for COVID, if they're waiting for diagnosis for COVID, if they've been asked to quarantine because of COVID, they get 2 weeks of basically paid time. You have to pay them as the employer, but you get all of that money back. Well, up to limits. There are some limits on it. But you get that money back from a payroll tax credit that you can take on your payroll filings. It does also apply to self-employed people. So that one is always an interesting one. That one will come more in the form of, again, if you have to be sick, if you're sick and you can't work, and you're self-employed, you actually do get to take tax credit for up to 2 weeks worth of work, which is kind of calculated the same way that they calculated what your kind of net profit was for PPP. Again, I have a whole video on this, so I'm not going to go too much into depth, but you need to know that. And then similarly, you get up to actually 12 weeks for paid family leave if you have to take off because the place of like your school is completely closed or where your daycare is completely closed and you have to be the primary caretaker for a child, and you can't remote work as well. So those are eligible. Again, those come in the form of payroll tax credits that you can actually take when you're running your payroll. You would denote that typically in your payroll system to say this was, paid leave under this act. And then your payroll provider will help you kind of get that, that payroll tax credit for it that will help offset that cost. Okay. So that's all of it. Again, I have a whole video on that one. It is on YouTube. You want to watch it, go check it out on my YouTube channel. It's just called Jamie Trull. You can find me, you can subscribe, you can see all my videos over there. Friday, I will be back. We're going to take a whole stimulus Q&A talking about all the different topics and wherever we are at the moment to see if anything has changed. I'm not super confident that there will be a lot of changes between now and Friday. It seems like, indeed, importantly, Senate is still in session. A lot of them went home, but they're still in session. They could still vote if an agreement has come up with, but that has not happened at this point in time. Okay. Does the payroll tax credit for FFCRA get reduced on the period's 941 payment, or would it just reduce the accumulated deferral on the 6.2 CARES Act employer deferral? It will be reduced on your 941 payments for FFCRA. So it will reduce that. And then actually if you don't get all that money back, like especially if you have a small amount of employees, right, and one of them takes leave, you might not have that much payroll tax. It may not recoup entirely. You can file a form that's on the IRS website called Form 7200 that can actually get you the excess back as well, so you don't have to wait. Okay, good source of printed FAQ on this to give to employees. What if you only have 4 employees? Yeah, so it still applies to you. So assuming you're talking about FFCRA, there's nothing yet on the executive action for the employee deferral because it's so new that there's nothing really out there on the specifics because they don't have specifics yet. But Department of Labor website is a great place that talks about the different reasons that you could take it. And I think that there's some good FAQs out there that might be useful for employees. If it would cause hardship, and I talk about this in the video, but if ERTC, if paying your employees to take sick leave or family leave would basically put your business under, even though you're going to get reimbursed for that money, right? If just the timing of it would be like catastrophic for your business because you're a very small business, businesses for under 50 employees may be able to be exempt, but it's not automatic. And you would have to keep all of the records and the documentation around why that was the fact that you were unable to do that. So that's just something to also keep in mind. How do you handle it if you don't have payroll, self-employed, no employees? Go check out. So assuming you're talking about FFCRA for the paid leave, I have a video on YouTube that's just for employers, but I also have a video that was a live like this one that I did probably about a month ago that talked about both employers, but then it also talked about self-employed. So that'll be under the lives section on YouTube that you'll be able to find that. I'll actually go, pin these in the comments as well so that you guys can find them easier. But there's a whole video that talks about how you take that. Essentially it works on your, you to reduce your estimated taxes, and then it will reduce your overall tax bill for 2020. So I talk a little bit more about that. Let's see. Mark says there's a poster required to be posted by FFCRA. I think it's on the Department of Labor site. Yeah, it's just like other regulations where you have to make your employees aware of them, right? There's some good. Go out to that Department of Labor website. There's some good stuff, and you can use that to sort of post the notice. Let's see. Do employees need to know in advance if they will get paid or if it is a hardship? I would let them know. I mean, I just think, but I don't know what the rules are around that, but I would give a reason if an employee is requesting the leave. And again, the video I did on FFCRA talks about, it goes into the documentation that you need to have, all of that. So go check out that video because I think it will help. But I would have an open dialogue if you are planning to claim exemption. You would probably want to have an open dialogue with your employees on that fact, because employees, I think it's starting to be more well known that this is something that's available to them. So it might be a surprise, and that's just not good for anybody, right? Let's say. Okay. Any word on the extra 400 unemployment benefits? Does the state need to contribute in order for the It looks like yes. It looks like the states do have to opt in. So what she's talking about is another executive order. I'll get more into this on Friday because I don't want to veer too much off topic. So I'm seeing some other questions about PPP and all of this. Yes, it is looking like they will have to opt in. So that gives even more uncertainty as to whether this is something that's actually going to come to fruition or not, or if we're still going to have to wait on Congress to be able to do this. Thank you, Gretchen. This is what I do all day. Okay, Mark says, thank you. Yep, you're welcome. Learned a lot about the possibilities of ERTC if they modify it in the future. Yes, so that's something definitely, because I know, Mark, you've asked about ERTC before. You're on this. Mark is like, he's always here live. I appreciate that. I noticed you guys, by the way. I notice you when you're always here. Mark's always here, and he's asked about ERTC before. So I want to make sure I'm continuing to keep you guys, aware of what's happening that could impact you. If we reduce our estimated taxes for FFCRA, will they not issue a penalty? No. So you would actually claim that. That would be a tax credit that you get to keep for FFCRA. FFCRA is not a deferral. So the last two, ERTC is a credit. FFCRA is a credit. The other two are deferrals that you eventually have to pay. So those are important kind of differentiations. The credit means you don't have to pay it at all. So it's gone, right? For that time period, for that leave. Again, especially if you're self-employed, make sure you're working with a qualified CPA who understands this. And when you file your taxes, make sure that you are as well. Oh, great. So we've got it. You should see it if you're on Facebook. You should see these links down below for the FFCRA live that I did. I don't know if that's the live or the video, but there are two different ones you can go look at. Okay, guys, love y'all. You're awesome. I will see you back here on Friday. So if you guys had questions on, PPP stimulus stuff, come back Friday, 1:30 Central Time. I will be here, and I'm looking forward to see you guys. Bye.